most important concept is that generally accepted accounting principles. Actually, it is referred to as GAAP, 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 generally accepted accounting principles. So, why it has been made? So, it is actually the rules or the procedures or the practices or the principles that has to be adapted by the person who is carrying out the business. So, particularly the companies which has got registered under the Companies Act 1956. So later on amendments, everything has been made in the Companies Act. So this gap is so important is that if you are maintaining a small business, some retail store or grocery store or something, they need not adapt certain rules or procedures like that. But once the company, if they are specifically they got registered and it is on their obligation that you have to compulsorily maintain the books of accounts means they have to adapt this gap, generally accepted accounting principles. What is the purpose of this? If you see, if you want to verify, if you want to make comparison, so last year's profit or last year's sales you have made, or what is the your asset worth, your machinery worth last year and this year or before 3 years back. For everything, if you adapt one same set of rules or the principles, if you adapt every now and then it will be easy for you to compare your results. So the first benefit is that one. And then people who are interested or people who are very much interested to know about your company's activities, company's welfare, they always look in for your balance sheet, that is your financial statements they will be looking. So at that time, if you are maintaining as per these rules or as per the principles, then they find your records is very reliable one. So they depend upon your records and your books of accounts, and based upon that only they will be investing in your company. So for that purpose, you have to adapt certain principles in your company. And to improve consistency. Consistency means every now and then, if you are adapting same method, then it will be easy for you even to compare your results. So last year one method if you are adapting for and this year you have, if you are adapting a different method, then it will not be easy even for you to compare your results as well. You cannot find out actually your true financial position or your true profitability position. So in order to improve consistency, every now and then you have to adapt a same rule or same practices. Even if you take for example one industry is there, a textile industry or a pharmaceutical industry or some other industries, iron and steel, whatever industries are there, IT, whatever industries. Under that, many firms will be working. Okay, so there will be large number of firms working under same industry. If you want to make comparison between your firm and with that of the other firm, you just, if you want to verify your profitability position with that of the other firm, if you want to make some analysis also, only if you adapt or go accordingly to certain rules or principles, then only you can verify whether you are going in a right path or whether your profits everything is going in, your company is going in a good position or not. You will be able to identify. For that purpose only, there are certain professional bodies like Institute of Chartered Accountants of India, ICAI, and then if you see American Institute of Certified Public Accountants, these are the professional bodies. Okay, so accountants, chartered accountants, and then professional bodies, they have laid down certain principles, rules and practices that can be adapted by all the companies. So the main purpose of this common rule has been brought into existence is to improve the reliability of the company, whether they are giving the published information, published data, or the financial statements, everything has been prepared according to the guidelines given by them. and whether they are going giving you the all the truthful facts only. So they should not misuse, or they should not misappropriate whatever the funds or assets are. They should not exaggerate any information. Only the factual things only should be given in the financial statements. So for that purpose only, this gap this has come into existence. So the main purpose is to, you have to verify also. It will be easy if you adapt the same similar practices in your business, which other business also adapts. These accounting standards, everything has came only to compare your results with the other firm, and you to maintain a systematic or consistent practices every year and then. Okay, so every financial year, if you're going to adapt the same rules means, then even for you it will be comparison can be made. Inter-firm comparison, intra-firm comparison, we used to tell. So inter-firm and within the firm, whether you're last year and this year or previous year, before that, right from 2016 to till 2019, like that, whatever might be, for data comparison, analysis, everything, it will be useful if you adapt same set of practices. And similarly, you can compare you with that of the other firm in the same industry as well. So for everything, this gap has come into existence. So all these accounting standards, these principles, everything, it has been laid on by the professional bodies. So what are the general concepts and conventions they have given regarding this accounting concepts and conventions? Just we are going to look it over. Okay, so this is a very important question, theory question. What are the accounting concepts and conventions? You might even you might get it in 15 mark or something. Okay, so it is a very important essay type question. So if you see, actually, the point one is business entity concept, accounting period concept, and then going concern concept. These are the subheadings you have. Matching concept, cost concept, dual aspect concept, money measurement concept, accrual concept, realization concept. Okay, so till that you will be having your concepts. So first let us understand these concepts, and later on we can go to the conventions part. So accounting concepts, in that important concepts are business entity concept. So what is meant by this business entity concept? Even though if you are starting a business, you are known as the proprietor, that is the owner of the company. You are the owner of the company. So if I am starting a business with name like ABC Limited or XYZ Limited, whatever might be. So if I am going to start up a business, so all the transactions will be recorded only from the point of view of the business. So there is no connection between me and that business. So whatever transactions is recorded, only from that point of view of business or the company, you have to make the entries, you have to make the transactions. So there is no relationship between the business and the person, and the person who has started the business. So that is what here given as the point. A business is treated as a separate person from that of the owners. So there is no connection or relationship between the owner and the business. So if I am going to contribute capital, or if I am going to whatever I have introduced as capital, from that if I am taking it anything even for my personal use also, that will be treated as drawings only. Okay, so whatever I'm taking from the business also, that amount, some 10 lakhs if I am investing, and if I am starting up a business with the 10 lakh, if I'm going to take 1 lakh for my personal use, for my family, if then that 1 lakh also will be treated as drawings only. Okay, so everything will be recorded from the point of view of business only. So they both are different person, artificial person. Business is a artificial person. So everything will be recorded from the point of view of business, but not from the owner's point of view. So this is the first thing. Everything it will occur in the name of the business only. Whatever transaction, whatever purchase you make, whatever sales you make, whatever dealings you have made have with a lot of people, everything will be recorded only from the point of view of business, not from the owner's point of view. So this is one important thing, business entity concept. And then accounting period concept. So usually whatever the transactions that are happening, everything will be recorded as per the financial year. Most probably every business will try to adapt this as the financial year. So what is your financial year is that if right from 1st April to 31st of March, every year will be maintained. So your books of accounts will start from 1st April and books of accounts will get closed on 31st of March every year. So almost all the business will adapt this as the financial year. So accounting period concept or periodicity concept also it can be named as. And next moving on to the going concern concept. So what is meant by this going concern concept? So actually if I am doing if I am a single owner, if I am starting a grocery store next to my home, then I need not adapt all the rules or the practices, or I need not adapt a double entry system, all those things in my business. If I am introducing capital later on, if some suffering loss, I may go out, I might just take out that amount back and I may close my business also. But this is not the case in case of a large scale level business or the company is got registered under Companies Act. So whatever what is their thing is that important one. There are lot of members, lot of shareholders will be there for that company. Lot of people are involved there. So if anybody has got retired, or if anybody has got or deceased, or if death has happened, or some person as member has got insolvent, has become insolvent, he is no more ability to pay his debt, like that, if he is going to just leave the company, in that case the company will not go. Okay, so the company it remains there only. Okay, so everything in the name of the company, if you are going to just record, whatever members they can come inside and go out of the company, but the company will be there only. So that is the going concern concept. So throughout it is going, it's an assumption that throughout it will go. Okay, so it will not stop for any person. If a person has got died, or if a person got retired, or if a person is moving from that, whatever might happen. Okay, so some person some death would have occurred, or whatever might be, to any shareholder or to any member, or whatever might be, it is a concept that going concern concept is the company will go just forever. It will not stop for any person. So that is the without any closure. It will be continuing. Whatever members coming or moving out, whatever might be, company will go on forever and records will be maintained. Accounting records will be maintained by that company. So that is the going concern concept main idea. And moving out to the matching concept. So what is meant by this matching concept is that if you want to find out your company's profitability position, so if you want to know whether you are earning profit or you are incurring loss in any particular year, only if your expenses and revenues are matched, then only you can come to know about your profitability position in your business. So matching concept is that you're going to match all your expenses. So what is meant by expenses? The rent that you pay for a building. So always you may not own a place or the building or the factory. Sometimes you might pay rent. If you are taking up for a rental basis, you have to pay them rent. So like that, salaries you have to pay to your employees, wages you have to pay for the uh, laborers, those who are working in your company. So similarly, lot of expenses are involved, printing, like that. Many expenses will occur in day-to-day distribution, for marketing purpose, for promotional purpose. You have to incur certain expenses in your business daily. Okay. Similarly, you might earn lot of revenue. You might sell some goods or the commodities to the customers, sell some assets to the assets, old assets or machinery something, or many ways you might receive some revenue, some receipts or some income to your business. Okay, so like interest you may receive, or commission you may receive, or discount you may receive, everything you have to take into consideration. All your revenues, that is your incomes or the receipts, you have to take into consideration, and all your expenses you have to take into consideration, that is your whatever payments you make. So you only if you match these two things, you can find out your profit or loss, whether you are earning profit or incurring loss in your business. And moving on to the next concept, that is the cost concept. So cost concept is that every assets will be recorded only at the original cost. So what is meant by the original cost? Sometimes it is known as historical cost. Historical cost or the original cost. So what price you are going to purchase that asset? If I am doing a business, and if I want to purchase a plant and machinery, if I want to purchase a machinery and install it in my factory, so whatever machinery I would have bought it for 2 lakhs or 5 lakhs, whatever might be, so that 2 lakhs and 5 lakhs will be the original price or original cost or the historical cost. Now, hereafter, what I will be doing, I will be giving the depreciation. So, what is meant by this depreciation? So, depreciation is that year by year, if I am using any property, even if you take your own car or a bike or whatever it might be, yeah, the value will not be the same every year, right? So if you're owning a bike, or if you are purchasing a bike or car now, so after a year it may not be the same worth. 1 lakh if you're going to buy a bike, end. Okay, so you are using that, you are owning that. Even if you are not using also, it will get rusted. If you are simply keeping as idle also, it will get rusted and it will depreciate, it will get decreased in the value. Similarly, in business also, if you are going to purchase a machinery and install it in your factory, and if you are keeping it in idle also without overhauling and without maintenance, all those things, then also it will get rusted. If you are using more and more of that machinery also, then its value will also get decreased there. So like that, whatever first, if you are going to purchase an asset, purchase a machinery, you'll be recording at the original cost, on the historical cost. Later on, you'll be providing the depreciation. So depreciation will be given year after year. So as everything will be provided based upon the book value of the asset only. Okay, so book value of the asset, based upon that only you'll be providing the depreciation. So just you cannot show the it in the same value. Then your profit, everything will get appreciated, right? So you must show some depreciation. You have to make some provisions for that. Okay, so because the true worth will not be after 5 years back or after 10 years back. So the value will surely get declined there. So then only you can replace your machinery later on. Okay, you cannot show it in the same amount whatever you have purchased. Okay, so that is the main thing. So cost concept is that all the assets, whatever you are making purchase in your business, everything will be recorded at the original cost. So original cost or the historical cost. Thereafter, every year you will be providing depreciation. That there are a lot of methods of depreciation are there. So that we do not go in depth now. Okay, the depreciation will be given or provided only as per the book value of the asset. Okay, so that is the cost concept, or sometimes it is referred to as historical cost concept. And next, moving on to the dual aspect concept. So, a dual aspect concept, actually it follows the double entry system, which we discussed on the other day. So, what is meant by double entry system is that every business transaction, I'm not speaking about the small scale business, that is small grocery stores or the retail outlets that I have within my next to my home, or something something somewhere. Okay, so I'm not speaking about those companies, but those business. I'm speaking about the large scale level business, which is the company, they have to strictly follow the and maintain the books of accounts. Those type of companies only now we are taking into consideration. So dual aspect concept is that they have to strictly adapt the double entry system. They have to maintain under that only their accounts. So that type of company, they have, for every transactions there will be two aspects. One is the debit aspect, other one is the credit aspect. So every transaction, whatever you are making entries in journal entries, okay, so everything it will actually have two things, two aspects. One is debit aspect and other one is credit aspect. Whatever benefit you are receiving, benefit receiving aspect is considered as the debit aspect. Benefit giving aspect is considered as the credit aspect. Okay, so if I am purchasing a furniture to my business, means furniture is coming out, coming to my business, and cash is going out of the business. Okay, so here what is the receiving thing? Receiving one is furniture. Furniture is coming to my business. So furniture I am receiving here, benefit receiving aspect. So furniture account I will debit. So what is going, cash going out of is benefit receiving aspect, and credit aspect is benefit giving aspect. Similarly, if I want to sell a furniture, so if I sell furniture, furniture is going out of my business and cash is coming into my business. Okay, so cash, then you will be debiting the cash. Cash account will be debited since cash is coming. Whenever I make sale, cash is coming in, receiving. Okay, so cash account will be debited, and what is going out, machinery or the furniture that you are selling, that is going out of the business, so that is that account I will be crediting. So double entry system, dual aspect concept is that one which follows the double entry system. And what is meant by double entry system is that for all the transactions, there should be equal and corresponding. If you are giving a debit, corresponding with same amount you have to give a credit. And if you are crediting something, same amount, corresponding amount with same amount you have to debit. So there should be equal between debit and credit. And what is meant by debit? It is a benefit receiving aspect, and credit is benefit giving aspect. So this is the dual aspect concept, which every company they have to strictly follow and maintain in their books of accounts, this concept. Moving on to the next one. So this is the money measurement concept. So as we know already, accounting, you are not going to record non-financial information. And expense only one concept. So here you will not be considering the qualitative aspects, the person's potential, employee's potential, or if he has given a good performance, all those things you won't consider, his attitude, his behavior, his skills, whatever he has, that and all we are not going to record here in our accounts. Basically, in our accounts, just we are going to record only the one which you can express in terms of money or some value. If you can give, if you can give a value for a missionary. Okay, so 5 lakhs if I bought, and today's worth is 2 lakhs, I can show in my balance sheet as a missionary asset side, missionary worth 2 lakhs I can show it, which you can express in transactions. If financial information or one which you cannot express in terms of money, you have to just ignore it. And next, moving on to the accrual concept. So what is meant by accrual concept? So if you see, sometimes you may not, you would have given the service, but actually you not received the amount for that. Sometimes you may render the service to a customer or some people, but the amount you may not be receiving now. Or similarly, you might have got the service from an employee, and he might provided you service, but you may not pay salary now or wages now. Okay, so those things will be coming under the accrual concept. So accrual concept is that revenues are recorded whenever they are earned, but not when received. You will be showing as accrued income. Accrued income means you have provided the service, but for rendering that service, you would have not got the amount from the customer or from some person. So accrued income. Similarly, outstanding expenses. Okay, or accrued expenses also you can name it as. So sometimes you may got the service, but in return you would not pay them. Like you would have used the building, but rent you may not pay now. Or you would have got the service from your employee, you may not pay the salary or wages to him. Those things are known as outstanding. So even that has to be considered. Accrual concept means that only. And realization concept. If you are making a sale, okay, so if you are making a sale, you can take it into consideration only if you realize the amount from that customer back. Okay, so if you are going to make a sale, and as of now today, if you are going to make a sale, and if you are going to earn that amount, you may pay in dues, or some maturity time period will be given to that customer. So only on the day when you realize that amount only you can consider it as a revenue or an income to you. Okay, not on the date, or if you are going to deliver now itself, if you are going to itself, you cannot consider that date as a realization. Only when you actually receive the amount for that, that date has to be considered by us. So realization concept is that if you are going to make a sale to a customer, if you are going to deliver whatever he would have sent you quotation, he would have placed you order. Okay, so your mindset will be you should not lose that customer. Okay, so you want to make sales to them. Okay, so you want to make a credit sale to him, and later on we can just claim from him. If you are in that mindset, and if you are going to sell goods, or deliver that goods to that particular customer, then you can consider it as a revenue only when you earn from him. Okay, on the date where, only on the date when it comes to your hand, on that day only you can consider it as the revenue or the income. So realization concept is that. So far we have discussed about what are the various accounting concepts. So any business, particularly the companies got registered, and those who have doing their business as per the following the guidelines provided by the Companies Act, they have to go in and follow all these concepts while maintaining their books of accounts. And moving to the second part, after the accounting concepts, the next part is your accounting conventions. So moving to the accounting conventions, this year we have actually four conventions. So one is the convention of full disclosure, other one is convention of consistency, and convention of materiality, and convention of conservatism. So what are the four conventions? Just like let us see. So conventions, whatever might be the business, they have to provide all the information which is required for the investors. They should not hide any information. They have to provide the entire information to their stakeholders. So who is a stakeholder? One who has got interested in company's activities, and one who is willing to know about the company's position, financial position, and other things. They are interested to know. So then that company, they have to provide all the facts and figures to that company, and they have to prepare utmost care. They have to while recording their transactions or publishing their financial statements, they have to do with utmost care, and they have to prepare it with honesty. There should be transparency in preparation. So what is meant by transparency? There should not be any hiding of information. Okay, just overestimating the assets value or depreciating the assets value or showing more liabilities or loss or something, so doing just to evade tax and other things, just to do those things, indulge in those activities, company should not get into. Okay, so full disclosure means based upon whatever information you have published, investor is buy decide whether he is going to buy share in your company or not, whether I can invest in your company or not, he is going to decide upon. So whatever information is given is, it should be given fully and with honest. You have to honesty, you have to prepare your accounts. So there should be transparency, no hiding of information in that. And convention of consistency. So convention of consistency means every now and then you have to adapt the same practices. This also again already we discussed only. Consistency means throughout. Okay, now this year depreciation, if I'm going to provide depreciation means decrease in the value of assets. This year I'm going to adapt one method, straight line method. There are a lot of methods to do in depreciation. Straight line method. Next year, WDV, written down value method. There are a lot of methods like that. So, like that, different methods I should not adapt in my business. Then for me itself, I cannot compare whether it is right or wrong. I cannot compare. Okay, so I cannot estimate my profit or estimate my financial position itself. So every now and then I have to adapt consistent practices. So there should not be change. Every now and then I should not change the method or the practice that I adapt. Okay, if suppose if if I want to value my stock or the goods that are lying in my business is known as stock. So this year market price, next year cost price. Like this, I should not get confused on my parts itself. There should be some clarity, and I should adapt some certain consistent practices must be there. Same rules, same method I have to adapt. Then only I can even compare my results. Okay, so that I have to take care of. Convention of materiality. So everything material information, one which is true, one which is relevant information only should be given. All those irrelevant, one which is not required, all those things I should not give in my financial statements. One which is not true, worthy, and one which is not required, irrelevant at present to disclose those information, irrelevant information, all those things I have to just neglect that. Only material facts has to be provided in the financial statements, that is your balance sheet or whatever might be. You have to give only the material facts, and immaterial things I just want to avoid that. I should not disclose irrelevant, not necessary, not required now. So that has to be neglected by the business. And convention of conservatism. So this is conservatism means playing safe. Always you are maintain business, you're going to maintain accounts there. So here you have to make necessary provisions. Okay, so if you are not providing depreciation, then every year if you are going to show the same value 5 lakhs, if I'm purchasing at the end of fifth year or 10th year, if I'm showing the 5 lakh, no, then how come I can reduce my assets value? Okay, then my profits, everything go up, shoot up. And whatever necessary, sometimes customers I may sell it on credit. Every time I cannot make on cash basis. Sometimes I may sell the goods on credit basis. And that time I have to make necessary provisions. If he is not paying back me again, then it will become a debt. Then it will become loss for me. So probably this customer, if he will not pay at certain point of time, if he doesn't pay me correctly promptly, or I may think that if he will not pay me back anymore. So those things, those customers, I have to provide some bad and doubtful debts, all those things. So provisions you have to provisions has to be made. Okay, so provisions has to be made just to reduce my profits. I should not shoot up my profit and show anymore. Okay, so whatever provisions can be created by me, that I have to show necessary in my books of accounts, so that I can reduce my profits and the other way. Okay, so these are the accounting conventions. So accounting concepts and conventions, why it has been given is that every business they have to adapt the same set of practices. Just for, they want to have have a consistent practices. They have to go by certain rules and regulations. How in institutions they say for every people, boys should be like that, girls, everyone they are naming it out. So they are giving you the guidelines as to how you have to abide by that. Similarly, the business who is carrying out or they are maintaining their accounts, they have to go in certain practices or certain rules accordingly. Then only they can make comparison out of that. They can go in proper manner. They can just verify, make analysis. Everything is possible only if they adapt certain guidelines in their business. So these are the accounting concepts and conventions. It is generally given by the GAAP. So according to that, some professional bodies they have given these kinds of guidelines which all business are required to be adapted.